It's the midweek edition of Business Morning. Thank you for joining us. I'm Chimizi Obi Iwago. Well, we'll tee off from the global oil market where prices slipped this morning on concerns that fuel demand will continue to falter as rising coronavirus cases across Europe and the United States, the world's biggest oil consumer, could impede economic growth. The Organization of the Petroleum Exporting Countries said in its monthly report on Tuesday that oil demand in 2021 will rise by 6.54 million barrels per day to 96.84 million barrels per day, 80,000 barrels per day less than its forecast a month ago as a result of the economic dislocation caused by the coronavirus pandemic. Brent crude futures for December fell by 12 cents to $42.33 a barrel, while U.S. West Texas Intermediate futures were down 11 cents to $40.09. OPEC and producer allies such as Russia, a group known as OPEC Plus, will stick to their plan to taper oil production cuts from January. On the supply side, crude oil production in the U.S. Gulf of Mexico continued to recover 4 days after Hurricane Delta made landfall, with the amount shot falling to 44% on Tuesday from 69% on Monday. And the International Monetary Fund has revised its growth forecast for Nigeria's economy to 4.3% in 2020, and that's positive 1.1% revision from the 5.4% contraction projected in June. In its latest outlook for the global economy, the IMF estimates that Nigeria's economy would grow by 1.7% in 2021 from its projected decline of 4.3% as the country seeks to recover from the impact of COVID-19 and low oil prices. Meanwhile, IMF's chief economist, Geeta Gopinath, says she expects the world's economy to fall by 4.4% in 2020, in contrast to an earlier projection of 4.9%, while growth in 2021 is forecast at 5.2%. According to her, the positive revision is driven by better than expected growth in advanced economies during the second quarter of 2020 and signs of more rapid recovery in the third quarter. And yesterday, of course, the federal government presented the budget breakdown for 2021. And of course, 2021 budget deficit of 5.1 trillion naira will be financed through borrowings from domestic and foreign sources. Let's watch this. It's less than 1 week after the president presented the 2021 budget to the National Assembly with a promise to keep Nigerians updated on the workings of the budget.
Good afternoon, Minister.
In keeping with that promise, the Minister of Finance is highlighting the key assumptions of the 13 trillion naira 2021 budget. The proposed appropriation includes a total of 615 billion naira for personnel expenses, about 3.66 trillion naira for overheads, and about 1.13 trillion naira for capital expenditure. Key assumptions for the budget include an oil price benchmark of $40 to a barrel, with daily oil production at 1.86 million barrels per day, an exchange rate of 379 naira to a dollar, as well as a projected GDP growth rate of 3% and inflation pegged at 11.9%.
The aggregate capital expenditure is proposed at 3.85 trillion. This is 29.43% of the total expenditure. I'm happy to report that we are near the 30% that was committed by this government in the ERGP. This 3.85 trillion is 43.4% higher than the 2020 revised budget, inclusive of capital component of statutory transfers, government-owned enterprises capital, as well as project-tied loans and expenditures.
The 13.08 trillion of expenditures includes 1.35 trillion naira of expenditures by those 60 government-owned enterprises. Their total, their gross projected revenues is 2.17 trillion naira.
The 2021 budget of 13 trillion naira has a deficit of over 5.1 trillion naira. It will be financed through loans from domestic and foreign resources, while taxes from the Nigerian Customs Service, company and income taxes projected at 7.8 trillion naira are to form major revenue sources for the government.
The overall deficit is 5.193 trillion for 2021. This represents 3.64% of the GDP. The Fiscal Responsibility Act has a provision that requires that the deficit should be at 3%. But the same act also has a provision that says, under unusual circumstances, the president, with the understanding of the National Assembly, can have a deficit that is higher than that 3%.
While the government is promising transparency in the implementation of the proposed budget, Nigerians will be watching to see if it will translate to improved socio-economic development for the country. All right, let's look at the education sector, which of course is part of the 2021 budget. The World Bank in its 2020 Human Capital Development Index, of course, noted that COVID-19 pandemic has threatened the gains in health and education over the past decade, especially in the poorest country. And the bank says investment in human capital, talking about knowledge and skills that people accumulate over their lives, is key to unlocking a child's potential to improving economic growth in every country. Well, that brings to question what the Nigerian government is doing with the education sector. And I'm being joined by a professor of counseling psychology, Faculty of Education, University of Lagos, and a former commissioner of education in Edo State, Professor Ngozi Osanrere. Thank you very much, Professor, for joining us on the show.
Thank you very much for having me. It's always a pleasure.
You're welcome. Well, when we talk about education, we know it's very critical to the development of human capital in every economy. How would you assess the quality of human capital in the country and how the Nigerian government has really handled the sector where you are in?
Thank you very much. How do I assess human capital? And how has the government fared in my sector? Objectively, the government has not fared very well. Objectively. Cumulatively, the government has also not fared very well. Because even when we if we don't factor in the COVID-19 impact, the education sector is still crying for attention. Yes, they will tell you that so and so amounts has been budgeted, like in the 2021 budget for recurrent budget for education is 545.10 billion.
Yeah.
And when anybody hears that, it's huge. But when you have recurrence of that amount, and when it comes to capital, and you are having 127, 127 is the capital budget for the whole of education. You begin to ask yourself, what exactly are we talking about? Though it has not been broken down, but what can 127 billion naira do for a sector that is in terrible state in terms of infrastructure, in terms of human capital development? So it is a little bit disturbing for some of us, because it is what you sow that you are going to reap. If you are investing 127 billion in capital development, it is across the sector, the unity schools, the colleges of education, federal colleges of education, the universities, then the Ministry of Education, Federal Ministry of Education, and other education parastatals. They are all part of this 127 billion. And by the time it's disaggregated, you will discover that is like dropping sand into the ocean and it won't be noticed.
All right.
And until we tell ourselves the home truth, we cannot be having such a disparity between recurrent and capital.
Right. Now, Professor Sarare, I mean, what you have noted, talking about how much that is allocated to education not being enough, could that be the reason why perhaps we're not churning out quality graduates? You know, you would say, because in recent time, there's been this argument that Nigeria is not churning out quality graduates. Is that the problem, or the problem, is it from the teachers or their lecturers, or what? Or is it because of the allocation to their budget?
You know, I told you that you reap what you sow. Is the law of nature. If the infrastructure is dilapidated, if the infrastructure is not enough, and if you don't have adequate and appropriate number of teachers and lecturers, then it's garbage in, garbage out. Because whether we want to accept it or not, we need to invest in education. Education is a social service, and because it's a social service, it is only through budgetary allocation that it can be funded. And it's one sector that you see when you don't fund it, when you don't invest, it shows. And when you invest, it shows. And like I always tell people, it is not enough to pay salaries, which is also not regular now, because there are many teachers and lecturers that have not received salary for several months. Even when the salaries are regular, what are the instructional materials you need? Do you have them? Do you have enough of what you need to impact knowledge appropriately and adequately? Those are the issues.
Right.
Those are the issues.
Okay, now, Professor Osarere, let's look at it. Recently, the president announced some kind of incentive for teachers. That was during the World Teachers' Day, you know, to motivate the teachers. Had increase in years of service, special salary scale, increase in years of service from 35 to 40 years. And then, of course, they talked about the fact that they would want to attract the best brains into the teaching profession. And so there was this reintroduction of bursary award to education students in the universities and colleges of education with the assurance of automatic employment upon graduation and the payment of stipends to Bachelor of Education students, as well as granting them automatic employment after graduation. Now, do you see some of these as incentives for teachers and, of course, for an average student who perhaps would want to choose a profession in education?
Thank you very much, Chimezie. Those are very beautiful actions on paper. Are they implementable? Are they implementable?
Why do you think they are not implementable? Yeah.
Yes, even the minimum wage of last year, how many of the states have paid? How many? And when you say automatic employment for graduates of education from universities and colleges of education. How are you going to do that? You know, before you make such a pronouncement, with due apologies, there should have been proper strategic planning for it. The federal government, okay, for teachers, is only the federal government colleges that the federal government has teachers. And you cannot compare the number of teachers in the federal government colleges to the number of teachers across the country. And you know education is on the concurrent list. The president has made that announcement, the pronouncement, with all good intentions, but how implementable? How implementable? Even the bursary for education students. I remember when I was an undergraduate, 30-something years ago, there was something like this. It was only the first year. And after that, nothing else was heard. Nothing else. And that was the end. 528 naira was the bursary for education students. And that was it. This announcement has been made, and it would be nice, which means we are now going to insist that we admit only those that are applied to study education, not making education a dumping ground that most universities do, is those that didn't meet up the cutoff of what they applied for, they shift them to education. And if you are going to insist that length of service will now be 40 years instead of 35 years, have you also factored in the upskilling of the teachers? Because you mentioned salaries, special salary, fine, beautiful. How are you going to ensure that it will not be politicized? It will not be an avenue to ensure that the cronies of the political bigwigs will be the ones. How are we sure that is the children that actually studied education, that actually need to be in the school system? You know, because if we don't do it right, we'll continue to have problems in the education sector. We need to sit down. Yes, the pronouncement has been made. To implement it, it has to be a deliberate planning process. What category of people are we admitting? And the automatic employment, how is it going to be done? How are we going to reach out, awareness, and discuss with the governors forum? Because you must carry the governors along. If you don't carry them along, you will not be able to achieve that. You won't. Education is on the concurrent list. No governor, we are talking of heavy wage bill. And I assure you that if you do your investigation, there are many states in Nigeria today where teachers have not been paid salary in the last 4, 5, 6, 7, some 8 months. We are talking of the 13,000 minimum wage, and we are now talking of some huge amount that many people, in fact, what is going to happen is that some lecturers in the universities will now leave the universities to go and teach in secondary schools because the salaries are higher than what some lecturers in the Faculty of Education earn.
All right, Professor Osarere, you need to hold your thoughts there. We'll take a quick break. When I come back, I would want to know, I know you worked as the Commissioner of Education sometime in Edo State. I mean, you know, I believe you understand the government side and, of course, as a lecturer in the university. So we'll talk to you about that after the break. We'll take a break now, and when we come back, we'll continue this conversation. Welcome back. If you've just joined us, you're watching Business Morning on Channels Television, and we are looking at the education sector, looking at how we can develop human capital. And I still have with me Professor Ngozi Osarere, who is the Counseling Psychology Faculty of Education at the University of Lagos. Thank you very much, Professor Osarere, for sticking on.
Thank you, as always, for having me.
Right before we went on break there, you were talking about some of the issues you see around the recent policy for the teachers that the president announced. Well, aside from those issues, of course, coming down to the university where you are, the ASU is on strike, the students are at home. Now, you were once a commissioner of education in Edo State, so you know what the government is feeling. You know how it feels from the government side, and of course, you know how it feels from the teachers' side. For you, what should be the way forward to resolve some of these issues, to get it right in the education sector, and to have the students back to school?
Thank you very much. What it requires to get the students back, what it requires is to do the right thing. What it requires is integrity. What it requires is to honor an agreement that you freely entered into. Because for me, it's an integrity thing. You got in touch with me, you wanted me to be on this program, and we agreed that I'll be on your program. Just imagine how it will look like when it's time for the program and I don't show up. And you had not made any previous arrangement for another guest. That is just a picture of what I'm talking about. You see, when people are not honest, and when people politicize everything, because education is being politicized, and we forget it is the lives of our children and that are being slaughtered on the altar of politics. What can the government do? Government freely entered into an agreement with Academic Staff Union of Universities. What is stopping them? They did not sign that agreement under duress. In 2013, there was a memorandum of understanding, which they also freely entered into. Last year, there was a memorandum of agreement. They also freely entered into it. So what is the problem? And, you know, for me, as a counseling psychologist, it creates a moral burden. How do you explain to young people that adults will say yes and will not mean yes? That adults will say they're going to do this and they will not do it. We are not looking at the psychological implications for our children. It has serious implications for child rearing. The upbringing of our children. Look at what is happening. So for me, is the honorable thing to do is for government to stop immediately this attitude of using the cane always to flog lecturers and telling the world that lecturers are fighting for salary. They're greedy people. They are greedy people. I wish that greed can come to. Let me use myself as an example. I have reached the bar of a professor since 2012, 8 years ago. And my total take home is just that it's not possible. I would have, if it's not that it's Zoom, if I was in your studio, I would have shown you my pay slip. My total take home is 400,000 naira. I didn't take any loan. I'm not owing any loan. Nothing. Nothing. So are you telling me 30 years after having a PhD and after teaching for 28 years with a PhD in a university and after being a professor and reaching the bar of the salary structure of a professor for 8 years, I should be earning 400,000 naira, which I have not even received. This is the 4th month I have not been paid. The last
Professor
time I
Sarare,
received that 400,000 was in June. So
Professor,
we are talking for
Professor Sarare, Professor Sarare, the
Yes.
picture you're painting is quite bleak. So are you saying the future is bleak for this sector?
The future is bleak unless we have to tell ourselves some home truths and do the needful. We have to sit down and do what we are supposed to do. You entered into an agreement. I'm going to do, there's going to be deliberate policy of every year, so and so amount of money will be plowed into the education sector to help in infrastructural development. You did it once, twice, and you stopped. We are talking of over 6-7 years. Things don't work that way. And we keep bringing up and establishing universities, commercializing education. Education is a social service. We cannot commercialize education and think we will get what is right. That is why every businessman wants to own a university.
Well, that's another, Professor, that's another topic for another day. We know, we know all that. Anyway, thank you very much for sharing your thoughts there. Let's hope we eventually get it right.
Thank you very much for having me, and I pray we will get it right. It is honesty, political will to do the right thing, and to honor an agreement. You cannot enter an agreement and not honor it. It does not speak well of adults, and it impacts negatively on the young ones. We are telling the young people that it is not proper to say that I'm going to do this and stick to it. Thank you very much.
Thank you.
Thank you. Been my pleasure.
Yeah, Professor Ngozi Osarare is a professor of counseling psychology at the Faculty of Education, University of Lagos. Thank you for your time. Oh, let's again look at the outlook for Nigeria coming from the International Monetary Fund, which revised its growth forecast for the country's economy to 4.3% in 2020, and that's positive 1.1% revision from the 5.4% contraction projected in June. In its latest outlook for the global economy, the IMF estimates that Nigeria's economy would grow by 1.7% in 2021 from its projected decline of 4.3% as the country seeks to recover from the impact of COVID-19 and low oil prices. Okay, let's turn to the Eurobond market. Recent data on sub-Saharan African Eurobonds shows that quite a number of the sovereigns and corporate papers at the secondary market have been recording bullish performance despite the impacts of the coronavirus pandemic. These data are reflective of investors' appetite on the Nigerian Eurobonds and a few corporates, just as the sentiment towards the Senegalese papers have also improved lately. Let's talk about this with the Managing Director, Afrinvest Research, Biodun Keripe. Thank you very much, Biodun, for joining us on the program.
Thank you, Chimeze, for having me.
Yeah, good morning. Well, last week, the Nigerian 2021 and, of course, the Senegalese 2021 securities recorded the lowest yields by 182 basis points. What has been the drivers for this appetite for the papers?
Oh, yes, thank you. I mean, our basket of the sub-Saharan African Eurobonds sort of tracks 7 SSA countries, and we have a combine of about 28 different instruments in this basket. I'm looking at the performance of a basket over the last week. What's somewhat bullish, somewhat strong performance. So average yield of the basket contract 50 basis points to bring the yield to an average of about 9.5% for the week. We pretty much sort of this strong appetite or this rebounding appetite to the general pickup in economic activities, and of course, on the back of the gradual easing of the measures that were earlier adopted to sort of curb the spread of the pandemic. And again, we're seeing a gradual pickup in demand for crude, and all of this combined together, plus the fact that even other commodities that are critical to some African economies, the prices of those commodities also are picking up. All of this combined sort of is driving appetite. However, this does not mean that most SSA countries are out of the woods. As we're well aware, there's still a couple of challenges and headwinds around the capability of some of this country to earn sufficient revenue on a sustainable base. Again, we still have some of these economies facing debt service issues, which are tied, of course, to still low commodity prices, and I mean, and the ability of government to be able to generate enough revenue to meet up some of these pledges is key at the moment. Again, if we look at the performance of African corporate bond market also in the week that was just ended, the performance also was somewhat positive. So average yield declined by about 33 basis points week on week to contract to about 5.9%. So really, all in all, the performance is just driven by the positive sentiment on the back of the reopening of economies, the pickup in demand for crude, and basically pick up the price of commodities, like I earlier said.
Now, some of these issuers, Nigeria, of course, inclusive, has had the difficulty of settling its foreign investors enough to repatriate their dividends. How do speculative bond investors feel about this?
Yes, we've seen instances even for Nigeria where investors have been very much unable to take out some of their capital, including the returns on some of the investment they've earlier made. And this is pretty much still connected with the fact that commodity prices are down. And so the capacity of the earning capacity for some of these African, sovereigns to earn dollar and meet up with some of their obligations came under significant pressure. For Nigeria, we could see that investors since around March, after the sell-off in March, we had a massive sell-off in March, have struggled to really exit the market. At some point, the total outstanding capital that was supposed to be repatriated was in excess of about $1 billion. And, this really has put investors and we continue to see them sitting on the sidelines. However, it's a market. We have traders in this market, and everybody's looking for opportunities. So even where you've seen these foreign guys able to exit the market, they've been able to repatriate their funds. Some of the trap funds, they still have to put it to use rather than having it just sitting down, lying idle. So some of them have had to put it to use. So the reaction has not been very, impressive or good at first instance. It speaks basically to confidence and low participation in the market. So with poor confidence or low confidence in the ability of some of the African sovereigns to meet up with their obligations, then it means that foreign portfolio investors would really be extra cautious in taking or making new investment decisions. We're likely not going to see any of this a reversal to this trend anytime soon, depending when probably when we see a decent level of growth globally, and then see more clearer economic activity and then we don't see cases of new cases of the coronavirus spreading, which should warrant another level of lockdown.
All right, thank you very much for your time, Obiodun. Obiodun Keribe is Managing Director of AfroInvest Research. Let's look at Tuesday's activities at the equities market, and we have Edidion Ewa here. Eddie, good to have you back. Good morning.
Good morning, Chimi. It's good to be back as well. Well, the market rose marginally yesterday after declining on Monday by about 0.02%, and that brought the month-to-date and year-to-date gain to about 5.6%. The all-share index was at 28,344.04 points, while the equity cap was at 14.814 trillion naira. Activity level was higher also compared to Monday's session, as volume was up by about 45.1%. We saw 35.83 million units worth 5.01 billion naira, all traded in 4,498 deals. Sectoral performance was broadly positive yesterday. The banking index was down 1.18%. We saw declines from UBA, GT Bank, Wema Bank, but then there were gains from Zenith Bank, from FBN Holdings, and from Stanbic Bank. So those gains were not enough to offset the losses on the banking sector. Consumer goods was up 0.88%. As we saw gains from Nigerian breweries, Honey Flower, International Breweries, and Cadbury. Industrial goods was unchanged. There wasn't any movement on the industrial goods giants, Dangote Cement and Boa Cement. Insurance was up 0.34%, while oil and gas was up 0.11%. But let's talk to Charles Fakruga, Chief Dealer at Citico Trust, for more. Good morning, Mr. Fakruga. Thank you for joining us on the program.
Good morning. Thank you for having me.
So it seems like we're continuing to see speculative profit taking on tier one banking stocks like UBA, for example. How long will that continue, and why is that happening?
Yes, well, that will continue for some time because for every investor, they want to buy low and sell high. So the profit taking will continue, and especially if they switch from a promising tier one bank like UBA. But I'm sure it's going to also continue for other banks. Once the opportunities are there, investors are bound to take advantage of that.
Well, First Bank, the largest component of listed FBN Holdings, is meeting with some investors today to deliberate on a 5-year senior unsecured transactions. Any idea how that would define investor sentiment for the stock today?
Yes, I think the First Bank, First Bank Holdings, is really going to impact on the First Bank Holdings generally, because, this is one of the largest banks in Nigeria, and over a period of time, the bank has been having some issues. So going internationally to seek for that kind of funding is the right step in the right direction. I just hope that the management will be able to make use of the funds for the purpose in which it is going to be used for. And we're going to see a significant improvement in operations of the group as a whole, and at the same time impacting positively in their share pricing.
All right, Mr. Fakruga, thank you for your input on the program. Do enjoy the rest of your day. Charles Fakruga is the chief dealer at City Code Trust. We'll have to leave it there from the markets now. Over to you, Chimi.
Right, thank you, Eddie. Well, hang in there. We'll get back to you for the debt and currency market. In the meantime, we'll take a break, and when we come back, of course, we'll do a crossover to London. All right, let's bring in Juliana now for update from the streets of London. Good morning, Juliana. Well, the new three-tier system of COVID-19 restriction has begun in England. What is it like today?
Pretty tense, I've got to tell you, Chimeze. Boris Johnson, the Prime Minister's new COVID strategy for this second wave is causing lots of controversy. There are growing divisions in government, between government and the scientists, and between the community. Just before I walked into the studio, I believe Northern Ireland became the first nation in Britain to say that the entire country is going to go into lockdown, a 4-week lockdown. Yesterday, Sir Keir Starmer, the opposition Labour Party leader, gave a televised address to the nation asking for a 2-week circuit breaker lockdown. He believes now that Prime Minister Boris Johnson has completely lost control of his COVID strategy, and those 3-tier systems, the medium alert, the high alert, the very high alert that he announced on Monday just doesn't go far enough. And this really goes back to a leaked document of a meeting minutes that were taken during the 21st of September, where SAGE are a scientific community kind of governing the scientific reaction to this. They advised the British government that the only thing that can stop COVID spiralling out of control would be a 2 to 3 week circuit breaker lockdown. That was ignored because Boris Johnson is under so much pressure to keep the economy ticking. And he decided to impose this 3-tier system, which does start today. Lots of leaders across the Northwest, which is where this 3-tier is really targeted, are not happy, but they seem to have come together in agreeing that the entire country should be locked down to try and stop the infection rising. Yesterday, we had 143 deaths here in Britain, over 17,000 positive cases of COVID. The 143 deaths is the highest death rate we've had in 4 months. It appears as if it's doubling every week, according to what Professor Chris Whitty, the Public Health England officer. And so Boris Johnson is on the ropes. It's getting pretty tense here now. Lots of people are asking for this national lockdown, and I expect that over the next couple of days, this is likely going to be announced. Northern Ireland have taken the lead first.
In the meantime, the International Monetary Fund came out with their World Economic Outlook yesterday, and of course painted some kind of less severe recession, not just for the global economy. The UK economy, of course, is expected to decline by 9.8% from the June forecast of 10.2%. But is there anything to share about this news, considering, of course, we saw the job data yesterday, quite unimpressive, and then the new restrictions?
Well, yeah, nothing to cheer about, I'm afraid. And even though the International Monetary Fund have downgraded the outlook for the global economy, well, they've upgraded it. They now believe that the global economy will only contract by 4.4%. It's still the biggest contraction we've seen since the Great Depression in 1929. But it's not. It wasn't great. It was pretty gloomy. They set the scene for the next couple of years to be pretty dark and full of austerity across the globe, potentially, especially in developing nations. I believe they predict that the cost of COVID will be about £21 trillion, which is a huge amount of money. And it's the long-lasting effects that I believe are the most stark. That appears to be the headline. Bringing it back domestically to here in Britain, yes, I believe they had over a 10% contraction when they looked at it last time. Now it's much lower than that. Of course, we already know from other data that Britain is expected to fare much worse than its European counterparts, or at least the Eurozone. And that's because we are a service-based economy. 80% 40% of Britain's GDP relies on services. And we know that the hospitality, travel and tourism industry have had the lion's share of COVID cuts. So it is going to be difficult in the short term here in Britain. Bank of England Governor Andrew Bailey also echoed those sentiments yesterday when he was speaking. But I suppose the only good thing that can be taken from the IMF's comments yesterday is that next year Britain is expected to bounce back much more quickly than its European counterparts, which is very good for Britain because, of course, we're in pretty tense Brexit negotiations at the moment, not forgetting that tomorrow is the self-imposed deadline for a deal, October the 15th, which was put in place by Prime Minister Boris Johnson. No hopes for a deal yet. But yes, even though the downgrade for the year for the Globe might not be as bad as it once had thought, the long-term output, especially for people less privileged, is pretty gloom.
Now, are the markets paying attention to this new economic forecast, or their attention is more on the new restrictions?
Definitely more on new restrictions. No points or sentiment seems to be heading towards IMF's way. But the FTSE started off in the front foot this morning. The FTSE 100, the blue chip index, is up 0.28%. The FTSE 250, the domestic market, also up. But I did look at these numbers just before the First Minister, Arlene Foster, in Northern Ireland, spoke about that new circuit breaker lockdown. So I suppose at intraday, these numbers will all change.
And of course, we expect to get update on that later. Thank you, Juliana. Okay, back here. And of course, we still have Eddie on board. Eddie.
Thank you, Jimmy. Well, activity in the bond market, there was some improvement in the bond market yesterday as investors are waiting for the Q4 2020 bond auction calendar. Now, at the long end of the curve yesterday, yields declined by about 11 basis points, while the midpoint and the short end also rose. We had 40 deals worth 20.74 billion naira at the bond counter. The Nigerian Treasury bills market generally was a bit quiet yesterday. The Nigerian Treasury bills market saw yields unchanged at about 1.37%, but there'll be a bond auction today, and I'm sure investors will be paying attention to that auction today. We had 4 deals on that counter worth 35.39 million naira. There were no deals at the Omo market yesterday. But let's talk to Chioma Udu, a fixed income dealer at GT Bank, for more. Good morning, Chioma. Thank you for joining us on the program.
Good morning, Eddie. Thank you for having me.
So all eyes are on the primary market auction today. What are your expectations from the auction, and how will that shape trading?
Eddie, we expect a lot of pressure and demand on that space. 124 billion is maturing, and then the DMO is tapping 104 billion, which leaves about 24 billion unaccounted for. There's a lot of liquidity in the system. Opening today, the system is up about 250 billion. So there's a lot of liquidity and not a lot of assets to match the liquidity in the system. So for that auction, we're going to see a lot of pressure, and we expect further moderation in rates across the three tenors.
As investors are also waiting for the Q4 2020 bond auction calendar, what should we be expecting, before that comes? What should trading be like? What would demand be like before we get that calendar?
Okay, for any investor, it's liquidity play and then searching for yields. Now, currently, the bond space, which is duration, is paying more on the interest rate level. So we see a lot of attention, like you rightly mentioned, at the bond space. Activities are mostly on that space. We've seen a lot of turnover as investors just chase yields and try to reinvest their maturing naira.
All right, Chioma, thank you for your input on the program. Chioma Udu is a fixed income dealer at GT Bank. We'll have to leave it there on the markets for now and just hope and keep our fingers crossed for a positive trading day. Over to you, Chimi.
And of course, we'll leave it there on the program just for today, because we're coming back tomorrow. Thank you for watching. I'm Chimezie Obi Iwago.